Well, Ozan Ozkirel is co-founder and managing partner at Tanto Capital. Good to see you again, sir. I mean, Steve and I were in broad agreement earlier on in the programme that...
Which makes for a dull old show, doesn't it? Can you please disagree with me? I love him dearly, but he's got...
I love disagreeing with you.
I'm not used to having someone agreeing with me sitting in that seat, so it's terrible television.
I mean, I disagree with you on US versus Europe, although I'm going to have to agree with you on what you just said about the AI kind of market and chip stocks.
Well, he hasn't even got his question and you already agree.
Go for it.
We think this is healthy, what we've seen this week.
I think it's healthy. I think to see a rotation out of...
Should we just go down and go to breakfast? Because we're all agreeing it's going to be rubbish telly. They can watch the other channel for a change, but they all agree there.
It's fine. Look, I think it's healthy because it's a rotation out of the AI stocks into some fundamentals, and I think it is an indication, a healthy indication, that the AI story is not just a software story. It's very much a physical world story, an infrastructure story, an energy story, a critical minerals story, a geopolitics story. And I think it's healthy that investors are getting the gist that it is not just about the promise of the future, but how you get there and how you execute. So, yes, Steve, I mean, I'm agreeing with you guys. It's not a problem in this case, right? It's Friday. Not a very happy Friday if you're in the tech business, but it's okay.
But can you put your finger on why sentiment appears to have suddenly switched and why investors are now all of a sudden thinking further out? When is this investment going to pay off? I mean, it wasn't a question that people were asking even a fortnight ago.
Sorry, I know I'm terrible at doing this, but we're having such fun. It is Friday. You mentioned a word there. You said, why has the investor sentiment switched? I don't think investor sentiment has switched. I don't think it's anything to do with investors. I don't think there's anything to do. I consider investors to be people who put longer term money to work. I don't think this has got anything to do with investors.
Short term punting.
Interesting. I think it's a confluence of factors, one of which that investors, or at least a part of the investor universe, can now credibly hedge out of going long the momentum trade, going long the Mag 7 stocks, because before the sentiment that switched, it would have taken a brave investor working for a hyper fund to say, you know what, enough is enough, I'm going to take away some of my profits in NVIDIA or Mag 7 and then invest in some fundamentals. Right? It was, I think, all about the short-term comp cycles and the fact that you can't expect investors to be brave against their short-term KPIs. So I think it's a confluence of factors, one of which is that now the investors also have gotten the memo that actually, you know what, we don't want to just bet on 7 stocks and not just the software part of one sector, but also look at fundamentals. But again, it doesn't mean you cannot play the AI game. It just means that you can play it in a more sane and structured manner, and I think that's what we're seeing.
Do you worry about the amount of leverage in the system right now, the fact that you're seeing a lot of these instruments, particularly, you know, some of the ones we've been talking about this morning?
I mean, look, I do, but I think when you look at news like Samsung reporting 19 times earnings coming up and the stock falls down 10%, that's not a story based on a lack of trust in the market. It's leverage coming out of the market, which I think is also healthy in the medium term.
Yeah, and it's across the board. And the problem is, if you are someone who is more circumspect, slightly cautious on technology, there's not many places to hide. You buy an index now, you're kind of stuck. I did a stat yesterday. I'll do it again because it was a good stat. The average historical percentage of semiconductors in the S&P, going back quite a long way, is about 2 to 5%. In the dot-com bubble, it got up as high as 8% as well. At the moment, semiconductors are 20% of the S&P. 20% of the S&P. So, you know, we can look stateside or European and say, oh, look at the South Koreans. 40% Samsung and SK Hynix. Pfft, that's crazy. It's not much further behind on the biggest index in the world.
No, it's not. And I think there's one element that we're not talking about, right? And we don't tend to talk about so much, that it is the social impact of what's going to happen. Now, you alluded on this on the previous with the previous guest.
Yeah.
People can't get jobs. You know, it's going to disrupt. Look, I think we were together in the Milken conference in LA. I don't know if you made it. I know you were together in NATO, but we couldn't see each other.
We were together in Milken. Yeah.
At Milken, I sat on a private lunch with someone that is very influential in the AI world, and he said, look, we are working on agentic AI becoming a reality around 2028. We are forecasting roughly 30% of job losses across the spectrum.
Wow.
Not at the same time, but it's coming. And by the way, 30%. No.
That's someone being honest with you, though, about the job losses, because a lot of people will say, there's no job losses.
But look,
30%.
But listen to this. So 2028, 30% job losses. And no nation state is ready for that. Whether you have universal basic income, universal high income, No one is ready. And then you have quantum computing coming up, and then you have agentic AI, quantum integration with robotics that's coming up. To your earlier point about students, young people looking to get jobs, I do agree that at the end, whatever that endpoint may be, things are going to be fine. It's the transition. If you don't manage the transition, it's going to be very ugly also in the front end of the curve.
Let me put up a chart. Just shows to me just about this oscillation we're seeing as well. Right, what we've done here is we put up the 1 year performance of some big chip names, okay? And I'll pick on Micron because it's one I've done just 10 minutes work on. Actually, no, it wasn't 10 minutes, about 2 minutes work on. Being honest. On the left-hand side of the screen, right of where it says A, so August, Micron was trading at roughly $100, yeah? As you move on to the right-hand side of the screen, towards the apex of that incline, it got up to $1,250. Now, and it's now roughly $850. Let's think about this. A stock has gone from 100 to 1,250 down to 850. And honestly, I don't think anything's changed. I think we still think that AI is going to be great. We're still worried about the commoditization effect. We're still worried about where the profitability is. We're worried about the adoption. But we're all kind of pretty much on the same story as well. That's brilliant. Thank you, Mike and Adam. How can a stock move that much on what isn't a massively changing news flow story?
Very simple. First of all, the financial markets no longer reflect the reality of the real economy. Number one. Number two, capital is concentrated at the hands of very few hyper investors that need a story. So this is not a democratized market. I mean, if a hyper investor, name your pick of one of the largest funds, right, believe in a stock and it creates momentum and everyone jumps on the bandwagon, you get these kind of curves. Yeah. But this does not reflect the real world, and the financial markets are increasingly no longer representing the real world.
Yeah,
that's the problem.
That's really worrying. I mean, speaking of the real world, I mean, if we'd been sat here a fortnight ago, Brent crude was trading at pre-war levels. Now it's back above $85 a barrel.
Yeah, and by the way, this shows on the CPI print, right? That's why looking at these numbers, also you have to take a look at it not from print to print, but transpose what's happening geopolitically. The CPI numbers came in softer, great, but that reflects the sort of softer commodities prices that was at the back end of a declining level of conflict in the Middle East, while it's now back up. So how do you price risk in this environment? And this is, I think, what a lot of investors, and by the way, boards have to think. You can't be myopic. I know your KPIs are going to be short-term, but you have to have at least a medium-term perspective to understand how you trade this thing.
So now comes the most obvious question of the interview.
Go on.
What should our viewers be doing?
About your own investments?
Oh, where should they be allocating their money?
Whether it's investors, whether it's young people looking to get a job, whether it's people looking to hedge their careers, your only hedge is dynamism and your mindset. To think that everything is not going to be static is the only way you trade this thing. And I think it's a very important paradigm shift.
All right, okay, so I've suddenly thrown off my middle-aged shackles. Steve Sedgwick is going to just rip himself into, he's going to put on a black T-shirt like Andy Burnham. I'm going to become dynamic. I'm going to get rid of the suit.
You must have it underneath your shirt.
Yeah, of course. Yeah.
Okay.
With a big S on it. For Steve, not Superman. What am I going to do? Okay, I'm dynamic. I'm really dynamic now. I've just changed completely.
No, look,
walk out the door and be dynamic. What am I going to do?
I think there is a premium attached to liquidity in this market. You're getting a higher yield on your liquidity than you had before, and then you still want to bet on innovation, which is very long term and is illiquid. Okay, so I think you should be playing a little bit of liquidity in the short end of the curve where you're getting a bit of yield. Invest in the longer and illiquid innovation cycle and name your pick. It could be defense, it could be AI, robotics, quantum, whatever it is. And then perhaps try to play the shorter dated bond market. And I want to be careful saying that because long-term debt as an asset class is under a lot of pressure. I don't see any value in investing in that, but shorter dated paper on areas and sectors that you're familiar with. Even going down the risk, going up the risk curve and going to maybe tier 2 issuances, maybe is not a bad bet. But just focus on the fundamentals. I think that is the market that we are living in, Steve.
So the rally remains investable. You mentioned defence there. What were your takeaways from the NATO summit?
Well, you know what? I think it was a better set of meetings than I thought it would be. I was participating in the NATO trilateral defence panel. And my take is, and Steve knows that I'm a Eurosceptic when it comes to all of these kind of things, but really that this was the wake-up call on the uptick that NATO and European countries in NATO have to spend more on defense. The impediment, by the way, is not necessarily the desire to spend, but the regulation surrounding how you allocate capital to innovators. Because if you are an allocator in a big country or a big fund, and you're governed by old world dynamics, you personally get penalized. Either you can get fired, get sanctioned, go to jail if you misappropriate funds in the defense world, which is fine. But if you marry that legislative landscape with the need to innovate, and you need to have these allocators putting tickets into new companies that are going to change the spectrum, there's a disconnect. And I think one takeaway is that this is where politicians need to become leaders and take a step forward and legislate accordingly. So what my takeaway from NATO was quite myopic from my perspective is Europe needs to legislate for once better and quicker to allow capital allocation to go to innovation.
Yeah, and thankfully there were some big European winners out of that NATO, including one we're going to speak to in a few moments' time, Saab. Michael Johnson will join us as well, and he was in Ankara, I was in Ankara, you were in Ankara. Didn't have the opportunity for you to buy me dinner, but we missed that. So.
Next time.
Next time, absolutely. Lovely to see you.
Likewise.
Thank you very much indeed. Ozan Özkural, who is the co-founder and managing partner of Tanto Capital Partners. Quick look at Burberry. It posted £455 million